Welcome to the deep dive. Today we're going to be taking a look at L&T Finance Ltd. LTF for short. You've given us a pretty impressive collection of materials on their performance recently. We've got financial results, auditor reports, and even their investor presentation.
It is a lot, yeah. A
Yeah.
real treasure trove of information. It gives us a really comprehensive view of all of LTF's activities in the last quarter and the 9 months leading up to December 31st, 2024.
And it seems like they're making some serious moves, reporting strong growth overall, a significant 23% year-over-year increase, largely driven by their retail lending business, which seems to validate their strategic shift towards retail and away from wholesale lending.
Yeah, it does. That strategic shift is really clearly reflected in their numbers. Retail lending now comprises like a staggering 97% of their portfolio. So it really showcases a pretty dramatic transformation in their business model. And what I think is really interesting is how LTF is emphasizing their consistent credit cost performance. Even with, amidst the recent challenges that they've been facing, they're projecting a real sense of stability and control, even when faced with these external pressures.
It's almost like they're saying, hey, we planned for this, we got this. Especially impressive considering some of the bumps they've faced, particularly in the rural market.
Absolutely, but that's a conversation for a little bit later. What I really found kind of interesting is LTF's foray into the digital realm. They've rolled out this new AI-powered credit underwriting engine. They call it Project Cyclops.
Okay, Project Cyclops, that sounds pretty intense. What exactly does that entail?
Well, it's really all about leveraging the power of data for smarter lending decisions. So Project Cyclops integrates data from a variety of sources, including credit bureaus and account aggregators, to try to get a more complete picture of a borrower's creditworthiness.
So they're going beyond the, traditional credit score. What kind of impact is this having on their lending practices?
Well, their early data shows a really promising 120 basis point reduction in defaults for their two-wheeler loans that are utilizing Cyclops. So, that's a pretty substantial improvement and really highlights the effectiveness of their data-driven approach.
Yeah, that's a pretty significant impact. It seems like AI is really becoming more and more influential in the financial world. Makes you kind of wonder what implications this might have for borrowers and the lending landscape as a whole.
Yeah, it's definitely a trend to keep an eye on. And speaking of their digital initiatives, their Planet app is gaining some serious traction. It already has over 1.5 million downloads. This platform allows customers to manage their loans, make payments, and even track their income and expenses all in one convenient location.
So it sounds like they're really focused on creating a seamless and engaging customer experience, not just relying on AI behind the scenes, but creating this user-friendly interface for their customers.
Yeah, exactly. And their emphasis on customer experience is evident in their Net Promoter Score, their NPS, of 54, which, indicates a very high level of customer satisfaction and a strong likelihood that people would recommend them to others. A high NPS like that really makes you wonder about,
Sure.
how sustainable that is over the long term. How are they planning to maintain those high levels of customer satisfaction going forward?
That's a great question. I mean, it's one thing to achieve a high score like that, but it's another thing to actually maintain it over time. It'd be interesting to see how they address that challenge moving forward. Now, we can't ignore the fact that LTF has encountered some hurdles, particularly in their rural lending business. The reports mention some challenges stemming from floods and a slowdown in government spending, which has had an impact on their rural portfolio. But they still seem pretty confident.
That they do. And I think this is where their foresight comes into play.
Yeah.
LTF had set aside what they call macro-prudential provisions, essentially a substantial buffer, about 975 crore, to use in case of, these unexpected events.
Oh, okay. So it's like having a financial safety net for their business.
Yeah.
A very prudent move. So how much of this reserve did they actually end up utilizing in response to these rural challenges?
Well, they dipped into these provisions during Q3 of 2025, utilizing about 100 crore, which shows, they're taking these challenges seriously and are willing to utilize these reserves to mitigate the impact.
And it seems like that confidence extends beyond just the current quarter, right? They're projecting that they'll need to tap into this fund further, estimating that another 300 to 354 will be needed in Q4. But, despite all of these headwinds, they're actually reporting strong collection efficiency in rural areas, even surpassing the industry average. How are they achieving this in such a challenging environment?
Well, their success can be attributed in part to their really stringent risk management practices, particularly their sourcing norms for rural business finance products. They've implemented this multi-layered maker-checker system for loan approvals, which ensures careful scrutiny at every stage. They're also closely monitoring customer leverage ratios, basically keeping a close eye on how much debt their borrowers are carrying.
So it seems like they're being very strategic and calculated in their approach to lending, especially in a segment that's been hit by these external factors. It's not just about, handing out loans. It's about understanding the risks
Mhm.
and taking proactive steps to actually manage them. Yeah, it's fascinating to see how they're navigating this tricky situation, and it looks like their efforts are paying off. I mean, the reports even highlight this specific case study of a rural business finance association where their careful approach to customer onboarding actually led to much better outcomes.
Yeah, that's a great point. It really underscores their commitment to responsible lending and their ability to, adapt their strategies to different market conditions.
Yeah.
But let's maybe shift gears a little bit and delve into some of the financial details in the reports. I think it's important to kind of get a grasp on how LTF is actually measuring its success
Yeah.
beyond just loan growth and NPS scores.
Okay, back to the numbers then. Where should we begin?
Well, one metric that really jumps out at me is their return on assets, or ROA. It's a really key indicator of profitability. And LTF has maintained a pretty impressive ROA, averaging around 2.6% over the past 12 quarters. So, this consistency is especially noteworthy given all the recent economic volatility and the challenges in the rural lending market.
So they're demonstrating ability to generate these solid profits from the assets that they have, even in kind of a less than ideal environment. That's pretty impressive. It really speaks to their operational efficiency.
Right, exactly. They've also steadily improved their net interest margin, or NM. In Q3 of 2025, it reached 8.5%. So that really showcases their ability to price their loans effectively and manage their funding costs. So this upward trend in NM is another positive sign for their profitability.
Yeah, a lot of these financial acronyms can get confusing, but the takeaway here is pretty clear, right? A higher NIM means better profitability for LTF. But what about their debt levels? Are they taking on, too much risk to kind of fuel all this growth?
Yeah, that's a valid concern. It's really important to carefully analyze their debt position. Their debt-to-equity ratio currently sits at around 3.46, which is, a little bit higher than some of their competitors.
Okay, so there's definitely some element of risk there, but
Yeah.
but it's not necessarily a cause for alarm.
Right, exactly. It's really important to consider the context here. Their credit ratings remain strong. The major agencies are still assigning them the highest possible AAA rating. So, this indicates that the lenders have confidence in LTF's ability to manage its debt effectively.
It seems like they've struck a good balance then between leveraging debt for growth, but also maintaining a solid financial foundation. Now, I'm curious about the performance of their acquired portfolio. The reports mentioned they've been pretty actively purchasing loan portfolios from other lenders, but it seems like that growth has kind of tapered off recently.
You're right, yeah. The value of their acquired portfolio has actually decreased year over year.
Yeah.
So that suggests that they're taking a more selective approach to acquisitions.
Yeah, maybe they're being more discerning about the deals that they pursue, kind of aligning that with their strategic focus on that higher quality retail segment.
Yeah, I think that's a plausible explanation.
Yeah.
It's also worth noting that this shift could be influenced by, the broader market conditions and the availability of attractive acquisition targets. But, let's maybe zoom out a little bit here. Beyond the raw numbers, what's the overall narrative that LTF is presenting in its investor presentation?
Yeah, let's get into that. They're really emphasizing their 5-pillar strategy for achieving their Laksha 2026 goals. It's presented as their roadmap for the next few years, and it's a pretty bold vision.
Lasha 2026. It does have a certain ring to it, yeah.
Yeah.
So what are these 5 pillars, and what do they tell us about LTF's strategic direction?
Well, in a nutshell, the 5 pillars are enhancing customer acquisition, sharpening credit underwriting, implementing a futuristic digital architecture, heightened brand visibility, and finally, capability building. Seems like a pretty comprehensive plan covering various aspects of their business.
Yeah, it does, and it really reflects a focus on both growth and sustainability. So let's break it down a little bit, starting with customer acquisition. What strategies are they actually employing to attract new customers?
Well, they're talking about strategically expanding their reach in both rural and urban areas, so adding more sourcing points, partnering with new dealers and aggregators, and tailoring their approach to each specific market segment. So it's not just about, blanket coverage, it's about being present in the right places with the right products.
Yeah, a more targeted approach like that is often more effective than
Yeah.
just, casting a wide net. And it seems like they're not solely focused on just acquiring new customers either. They're
Yeah.
also emphasizing cross-selling and upselling to their
Right.
their existing customer base.
Right. They've built this pretty impressive customer base, 2.5 core individuals. So that's a massive pool of potential there for expanding those existing relationships and increasing the value of each customer.
Yeah, it is. Their existing customer base is a very valuable asset. But as you kind of alluded to earlier, they're treading carefully, especially in this current economic climate.
Yeah.
Pushing products on customers who aren't ready or financially able to take on more debt wouldn't really align with their emphasis on responsible lending.
Right, and that's where their second pillar comes into play, sharpening credit underwriting. So tell us more about Project Cyclops and how they're using AI and all this data to make these more informed lending decisions. How is this different from the more traditional methods?
Well, we touched on Project Cyclops a little bit earlier, but it's worth diving a bit deeper. It's really all about gathering and analyzing as much data as possible to get a comprehensive picture of borrowers' creditworthiness. So they're going beyond traditional credit bureau data and incorporating information from account aggregators, alternative data sources, things like trust signals, even things like microgeography and satellite data.
Wait, satellite data? It sounds like something out of a science fiction movie. Well, what role does that actually play in assessing
It's
creditworthiness?
not about spying on customers or anything like that.
Yeah.
They might use satellite imagery to assess economic activity in a certain region, or to get a better understanding of a borrower's location and assets. So it's about leveraging technology to gain these deeper insights
Yeah.
and make more informed risk assessments.
It sounds like a very data-driven approach, but with a human touch
Yeah.
to ensure responsible lending. And it seems like they're already seeing some positive results from this approach, especially in their two-wheeler loan portfolio.
Yeah, absolutely. The 120 basis point reduction in defaults is really a testament to the effectiveness of their AI powered underwriting. But they're not resting on their laurels. They're expanding Project Cyclops to their farm equipment finance business and continually refining their models and incorporating new data sources.
It seems like they're really embracing this culture of continuous improvement. And while they're leveraging this cutting-edge technology, they haven't abandoned the more traditional risk management practices.
Yeah, you're right. They've also implemented these very strict portfolio policies and sourcing norms, particularly for their rural business finance products, which are designed to really mitigate risk in a segment that's been hit hard by these external factors.
Right. And the reports kind of delve into some fascinating details about these measures. For instance, they've instituted these strict association norms to limit the number of lenders a borrower can actually have, and they're very diligently monitoring customer leverage ratios.
Yeah, those are great examples, and they're not just passively monitoring these metrics either. They're actively using these sophisticated data dashboards to identify potential red flags.
Hmm.
Early on, they even have a dedicated risk control unit that's solely focused on ensuring the health of their rural portfolio.
So it's a very proactive approach to risk management, aiming to actually prevent defaults rather than just reacting to them. And they're backing up all these claims with data, showing how their stringent norms are leading to better portfolio performance.
Yeah, their transparency is really commendable. They're not just telling you that their approach works. They're actually showing you the data and explaining their methodology.
Yeah, it's refreshing to see a company that's so data driven, in their decision making. But let's move on to the third pillar of their strategy, implementing this futuristic digital architecture. What exactly does that entail? Are we talking flying cars and robots here?
Not quite yet. Think of it as kind of constructing the technological foundation for a more efficient, customer-centric, and ultimately, more profitable lending business.
Okay, so less science fiction, more practical solutions. What are they actually doing on the digital front that's so groundbreaking?
Well, we've already talked about their Planet app,
Hmm.
which is a prime example of their customer-centric
Yeah.
approach. But they're also investing heavily in their back-end systems, creating this API-first technology infrastructure that allows for seamless integration with other platforms and partners. So, they're talking about significantly improving transaction processing speed, increasing their data handling capacity like tenfold,
Hmm.
and leveraging machine learning to really optimize every aspect of their operations. It's a pretty ambitious undertaking.
It sounds like they're really building this more agile and responsive system that can handle the ever increasing volume and complexity of their lending operations, and it seems like they're really fully embracing cloud technology and all the advantages that come with that. Would you say that's a fair assessment?
Yeah, absolutely. They're moving away from these legacy systems and adopting a more modular cloud-based architecture. So
Yeah.
this allows them to scale their operations up or down as needed, integrate new technologies very quickly, and ultimately, serve their customers more effectively.
It makes sense. I mean, in today's rapidly evolving digital landscape, adaptability and innovation are key. Speaking of adapting, let's move on to their fourth pillar, heightened brand visibility. How are they planning to really differentiate themselves in such a crowded marketplace?
Well, they're taking a multifaceted approach. They're increasing their brand presence across a variety of channels, both online and offline. They've launched some really creative marketing campaigns, including their Sapno Wally Diwali with AI initiative, which garnered millions of views on social media.
Oh, interesting. Do we know what the actual impact of that campaign was? Like, did it actually translate into, tangible results like
Fun.
increased customer engagement or loan
The
applications?
the reports highlight the reach of the campaign and the social media engagement, but they don't provide specific data on its impact on
Yeah.
customer acquisition or loan growth. So
Yeah.
that's a good example of where you know maybe some additional information would paint a more complete picture.
Yeah, it'd be interesting to see. You know how they're actually measuring the return on investment for these kinds of initiatives, but
Yeah.
it's clear that they're trying to go beyond just traditional advertising.
Right. Yeah. They're also sponsoring events like India Bike Week
Yeah.
and organizing industry conferences like their AI focused REISE 2024 event. So these initiatives really position them not just as a lender, but as a thought leader in the financial services space, particularly in the realm of AI and digital innovation.
Yeah, it's a smart strategy by associating themselves with these cutting edge events. They're really enhancing their brand image and kind of attracting this more tech savvy audience. And finally, let's talk about their fifth pillar, capability building. What steps are they taking to attract and retain top talent? I mean, in this competitive market.
Well, they're making significant investments in their employees,
Hmm.
both in terms of training and infrastructure. So, they've established this new integrated tech operations and data science facility in Navi, Mumbai, and they're upgrading their branches across India.
Those are pretty substantial investments. It sounds like they're creating a very modern and appealing work environment.
Yeah, and they're going beyond just physical infrastructure as well. They've launched various employee engagement initiatives, things like flexible work arrangements, a continuous education policy, and programs to really support women in the workplace.
It seems like they understand that attracting and retaining talent requires more than just, a competitive salaries. It's about creating this culture that fosters growth and flexibility and inclusivity. And that kind of ties in nicely with their emphasis on ESG principles, right? I mean, they've even received recognition for their efforts in this area, including a Mahatma Award for ESG excellence. But how do we assess the true value of these ESG initiatives? Are they just a form of corporate branding, or do they actually represent a genuine commitment to sustainability and social responsibility.
Yeah, that's the million-dollar question.
Right.
And it's one that investors and stakeholders are increasingly grappling with. While awards and ratings can provide some insights, I think it's really important to look beyond the accolades and examine the substance behind these initiatives. How are they actually integrating these ESG principles into their core business operations? What impact are they having on their environmental footprint, their relationships with employees and communities,
Right.
and their overall corporate governance?
Yeah, those are all really important considerations. I mean, it's not enough to just talk about ESG. Companies need to actually demonstrate tangible actions and measurable outcomes.
Exactly. It's about walking the walk, not just talking the talk. And this is where transparency and accountability really become paramount.
So what does all this mean for you, our listener?
Well, it's clear that LTF is a company that's making some pretty bold moves on
Yeah.
multiple fronts. They're demonstrating resilience in this
Yeah.
very dynamic market. They're embracing this digital transformation, prioritizing customer experience, and really investing in their people. They're also showcasing this awareness of their responsibility to a wider set of stakeholders, going beyond just their investors.
Yeah, they're certainly a company to watch. Their strategic direction coupled with their commitment to innovation and sustainable practices really positions them well for future growth. But
Yeah.
it's important to remember that no company operates in a vacuum. External factors like regulatory changes,
Yeah.
economic fluctuations, competitive pressures, these can all impact their trajectory.
Yeah, that's a great point. It's important to always consider the broader context and not just rely solely on a single company's narrative. Exactly.
Yeah.
And as always, we encourage you to explore the source material yourself and draw your own conclusions. The full investor presentation, along with all the other reports that we've discussed today, they're available in your show notes.
It's been a fascinating deep dive into the world of LTF. They're clearly a company that's embracing change and striving for excellence. But ultimately, it's up to each individual investor to decide whether their approach aligns with their own investment philosophy and risk tolerance.
Well said. Investing is a personal journey,
Oh.
and informed decision making is key. So we hope this discussion has provided you with some valuable insights to help you on that journey.